Is Trump planning a recession? New tariffs, tax policy shifts, and economic strategy all point towards a deliberate slowdown. Is this by design? Peter, what if I were to tell you that playing as day, the Trump administration, and all the ways that matter have been telling everybody we're going to have a recession. We're going to do it. We're going to do it hard. We're going to do it now, and it needs to be done, Ron Paul style.
No, there's no way they're doing that.
Yes. So it looks 100% like that's what they're doing.
What?
Yeah. So I'm going to.
Trump doesn't want to preside over a weak economy. How long will this recession last for?
A year, 2 years?
What? He only has 2 years to do what he wants to do in office.
Well, let me just paint the scene over here. Let me show you the evidence of it, because we need recessions. People talk about recessions like it's a bad thing. The reason we have recessions is because we have expansionary periods, and you guys are juicing up the system in order to have expansionary periods. So then you can have a recession. If you use your $10,000 credit card in order to go on a trip to Maui, and you come back home, well, now you're going to have to cut some corners in order to pay off your $10,000 debt. Expansion, contraction.
Not if you print the money. You said if you can print the money, you don't care.
That does not change. In the recession, it's a recession because it's the aggregate of the population, right? So they printed the money, but not everybody gets that. And so the business who hired too many people now, and he has too many people to meet the sales demands that he has, well, now has to start selling off people or firing people because their labor is the highest line item on their books. And so as they start doing that, other people start saying, hey, they're doing that over here. I also have the same sort of problem. Let me start selling too. More people end up inside of the labor pool, and we end up inside of an economic contraction because those people who have been fired have less money to buy things, and you have less money that's flowing, blah, blah, blah. All the way down to get to the point where they fired everyone that they're going to fire. And then we have this plateau period, and then people start taking a little bit more risk. They start succeeding, and then other people see that. They start hiring more people. More money starts flowing into the economy, and we get the sine curve up. So that's just the business cycle. And so even when they're pumping money within the system, you get this ramp up within the business cycle. But eventually, there's no more people to buy. You already bought all the cars. You already bought all the things, and then you're going to have this economic contraction.
And you're saying that's a good thing?
It's natural. It just happens. Well, that happens naturally anyway.
Yeah, but is it painful?
Well, it's painful because when they goose up the system, when they introduce money into this cyclical system, they expand the top end of the range. And so the bottom of the range is proportional to how high you were for how long you were. So the longer you have your credit card debt, the more you've built up on it, the more you spent on it, the more you're going to have to spend time paying off.
So
now, if that money is used in a productive way, if it's not a trip to Maui, but instead it's to start a new business or whatever, like when you take out a loan from a bank and it generates productivity and you end up with more money incoming than you did before you did this, well, then you pay that back faster and then you don't have the same economic contraction. But that's not the way money has been spent by the governments in the last two turnings.
Is that the way they intended it when they first set up the Federal Reserve, that they were going to be responsible with where their money went? It would goose productivity and ease these downturns?
Well, the Federal Reserve's its mandate is employment and prices, not necessarily growth within the economy. They do talk about that, but that's not their mandate. They don't succeed or fail whether there's growth. They just want to make sure that the volatility of prices and of employment is not high. So, okay, I'm making the claim here that Trump wants a recession. I'm not the only one. Ken Carson is the one who's been introduced this idea to a lot of people, and other people have picked up on it. But it's not something I'm hearing a lot in the news. Like, hey, you guys are going to cause a recession. Like, that's your goal here. And so let's just take a look at a few pieces of evidence.
I'm finding it hard to believe Trump wants a recession. I'm finding it. This is one of the craziest claims I've ever heard.
I think he absolutely does. All right, let's start first with the strong dollar.
Very strong on that. Then there's bilateral trading relationships, and is the dollar strong or weak on that? And is it strong because of U.S. fundamentals? And I can tell you, we are committed. This administration, President Trump, are committed to the policies that will lead to a strong dollar. If we bring back more manufacturing, if we have cheap energy, good tax policy, deregulate, we will end up with a strong dollar. But what is unacceptable is in a bilateral relationship, other countries trying to weaken their currency. And so we are against the currency manipulation on a bilateral basis, but globally, the strong dollar is very important. We will continue as a reserve asset, and I think anyone who has an inclination that this administration thinks differently on that's wrong.
All right, I missed the first part over here. I just wanted to get where he actually asked the question.
A weak dollar would really. So I called it a radical departure. Maybe it's not really a radical departure. I want to talk about the dollar and wonder whether there's the slightest crack in what we've had from every Treasury Secretary. I mean, we always ask them the same thing over the years. I've been here so long, been through so many Treasury Secretaries. I've never heard a Treasury Secretary say that they're not for a strong dollar. But a weak dollar would really be an answer to a lot of what you're talking about here in terms of trade deficits, in terms of, you know what a weaker dollar does for future obligations that we have with 37 trillion in debt. That makes it a little easier. Lower interest rates implies probably a weaker dollar. Would you accommodate a weaker dollar at all? Is there any motivation at all to let that happen? Or
Yeah, so he starts off this idea, no Treasury Secretary ever says that we want a weaker dollar. We also have a stronger dollar. But a weaker dollar would go a long way in order to satisfy all the things you're talking about, in order to try to lower inflation, well, not lower inflation, but the lower debt servicing, increase liquidity, a bunch of things that are good for the low dollar. And what does Scott say after that? His answer is, we want a strong dollar. We want a strong dollar. But then he qualifies it. He says a strong dollar, there are three components to the strong dollar. There's a strong dollar because there's productivity within the nation, and it's strong in that sense, that it's a dollar that people would want. It's a strong dollar because foreign nations are printing their currency, so lowering the value of their dollar, which is causing the increase of the dollar. And then there's the trade dollar, the trade weighted dollar, that is how much goods can be bought and for this currency versus another currency. There's a trade weighted dollar. And he goes, what we want is the domestically strong dollar. We don't want the dollar to be strong because of an imbalance, currency imbalance.
Because that's fake
So,
or manipulated.
well, it's not fake. It's just manipulated. It's other people printed their currency in order to get more of yours. So yeah, your dollar is higher versus theirs, but they're manipulating the currency in order to get an economic advantage on you. Now they can get more of your stuff because they're printing their dollars in order to get the things that you have. So it could be a weakness, and it causes deflation, disinflation and deflation within the United States economy, because the dollar keeps going up. And so even though they can buy more goods outside because everyone else's currency is weaker, internally it's harder and harder and harder to get by. Your dollar is so strong that it's hard to get it within your own nation, and it causes more divide and social upheaval and all that sort of thing.
Why is it harder to get within your own nation? Because people prefer to spend their money abroad?
Well, the dollar is high because it's hard to get. Like, the reason why it's high is that you have to bid more in order to get it. And so the ability to acquire capital, to get loans in order to start new projects or to spin up new businesses, all these activities become difficult because it's harder to get dollars.
I see.
It's sort of like the opposite of inflation, where the dollars are so abundant that they become less, not as worthwhile, which is the problem that the countries, when they print the currency that they have inflation internally, but they can then buy more things, more foreign things, at least for the duration that they're printing. And so both deflation and inflation are bad, but for different reasons. And so he's saying over here, Scott is saying that we want the dollar to be strong, but when we say strong, what everyone normally means is strong versus other currencies. That's what we all mean by strong dollar. How many Canadian dollars can you buy with one American dollar? How many Japanese yen can you buy with one American dollar? That's what we all mean. But he's saying we want a strong dollar, but we want it to be strong like domestically. because we have great productivity locally. Well, my friend, Triffin's dilemma means you can't have that. Like normally, you can't have that.
because they're the reserve
Otherwise,
asset.
exactly, the reserve world reserve currency. I'm not going to go through the whole thing. We have a video on Triffin's dilemma, but essentially, the country that issues the world reserve currency has a choice to make. You either supply dollars to the world, and at the expense of your own nation's economic and social cohesion, or you increase the social and economic cohesion at the expense of the rest of the world. And so
And
he's saying we're going to do the latter. We're
so
going to
what
put on
about
tariffs. We're going to fix trade deficits. We're going to make a strong dollar domestically. We're going to bring back manufacturing. We're going to close our borders, all that sort of thing. We're going to make ourselves strong, and the rest of the world is like, yeah, but we need our dollars though.
so can you still be the reserve asset if you do that?
Not for long, not forever.
All right, but you could do that and then transition to Bitcoin as the reserve asset.
Sure, but I don't think that'll work on its own. That's like another scheme. Because if they do that, then they're no longer the world reserve asset.
But they still have all the guns.
Not enough. So what you need to do is, if I were running the economic system in the United States,
Tom, what would you do if you were running the economic system in the United States?
I'm glad you asked, Peter. So what I would be doing is understanding that at this printing press, I would make sure that when we're printing, it's in order to get more dollars, that where it affects us is to cause more productivity. I would be like, we're printing dollars, but everything's got to generate productivity. Every dollar printed has to generate more than a dollar's worth of return. And if that's not the case, then we've got to change what's going on over there. With the idea of exporting dollars. So basically, I would have a few years where I'm focusing domestically to get up to positive productivity, positive output, at the expense of the rest of the world, with the expectation that we're going to switch afterwards and we're going to favor the rest of the world until the productivity goes down to almost zero, and then we're going to switch back again and go the other way.
So you're saying if you create expectations that people can count on, then they can plan for these movements,
That's
and
right.
it won't be as disruptive as if they just didn't
Which is
know
what
what's going
the
on.
central banks do, right? The idea is that they're forward guiding, they're letting you know ahead of time, hey, this is the sort of things we're going to be doing in the future. So plan accordingly, and the markets adjust, and we have that. We can plan. Even if they say we're going to cut rates to zero, you can plan for that. If they say we're going to raise rates 0.25%, or the expectation we raise rates 25 basis points every meeting, well, you can plan for that. It's the uncertainty that's the problem.
You said there were three reasons for the dollar, three ways for the dollar to be strong. One is domestically, you're strong domestically. Second is the relative trade, relative currencies. And the third way was
Trade weighted.
trade weighted. Isn't that already the case that it's trade weighted?
Well, there's always a trade weighted currency, those trade weighted dollar that's being that's floating around. And what we're seeing now is that Donald Trump wants to reduce the trade deficits with around the world. So I actually, the reason I was bringing all that, I wanted to bring this up on the screen. They could say all they want. I mean, I care about what actually shows up on the friggin' charts. All right, that's what I care about. And what do we see with the dollar? Just like Mike and I were talking about for weeks, the dollar has plummeted 5%. A 5% move in a currency is pretty gosh darn significant. And you'll remember on previous episodes, Mike and I were talking about that the last time Trump was president, the dollar came down.
Which is good.
Well, it adds liquidity, so it can be good in some way. This is not the trade weighted dollar. We're looking at the DXY, so it's versus other currencies.
I see.
And so when it goes down, the gap, when the dollar goes down, the other currencies go up. So the gap between the two.
So they don't like that. the other currencies don't like that.
Right. So if you take a look over here at, I don't know if it's a little bit too crazy, but the green one is the United States. And then these other ones are other nations' currencies. And so you can see that they're inversely correlated, right? When this goes up, this goes down. When this goes down, this goes up. That sort of thing. And now we're headed down, and these guys are coming up. And so you reduce the discrepancy between the different nations, which correlates with the business cycle. And so what happens in this scenario when the dollar goes down is that it means that liquidity in the future. Remember, I was saying in the previous segment that there's a delay between the government action and then how it shows up in the economy. Sometimes it could be up to 2 years delay. Well, we're at the beginning of that. We're at the beginning of, hey, the dollar's coming down. That means later on, sometime on like starting April, liquidity is going to start juicing up. Okay,
That's
which
bullish
means
crypto.
you sort of want a recessionary period. You want as deep of a recessionary period before you get to that point. You because if you're going to have the pain, if you're going to have the pain of a contraction, get it over with as soon as you can now. And we're seeing that with bond yields, long-term bond yields are coming down. The stock market's down 7%. Bitcoin is down off its highs. Victoria's Secret stock is down 60% from the high. Nvidia is down 20-30%. Stocks are just rolling over. So, all right, that's just a couple of the beginning points. I'm going to continue on here with Scott Bessent, who, remember, he's a spokesman for the government. They're all spokesmen for the government, but you don't normally hear the spokesman being this transparent. So let me just play the next segment over here.
And just a reminder, you're proving why you think Donald Trump is intentionally allowing a recession.
Yeah, he's intentionally causing a recession so that we get a bunch of the excess out of the system. Well, this is what it seems to be the case. To get a bunch of excess out of the system to reduce the gap between the rich and the poor, to bring inflation down, and then later on begin cutting rates, QE, the whole thing.
I'll be honest. I
And
want
the
that gap.
presidency with the higher.
I want that gap between the rich and the poor to be as wide as possible.
Oh, don't worry.
Get me away from those poor people.
All right, so let's hear what he has to say. Scott Bessent, Treasury Secretary Bessent, has to say about the Trump call.
Side is, if we have good policies, then the markets will go up.
He says he's not watching the stock market very closely. Are you?
I watch everything, but and
Okay, what's the Bessent put? I mean, you are going. You know how the media covers things, and we're down 6% on the S&P. From what you read on a daily basis, it feels like we're down 60 at times. Although the Nasdaq is down in correction territory at this point. I'm just wondering what if we ever went down 20% on the Nasdaq or 15% on the S&P. With people that want Trump to fail, that's going to be splayed across every newspaper in the world. I'm just wondering whether the tolerance for something like that for the administration.
well, look, as you said, Joe, the market was up 20% last year, 20%
So there is
the year
some
before.
house money
No,
you're
no,
playing
no,
with.
no. I'm going to put it another way.
Okay.
Did the Biden administration succeed? The American people weren't buying it just because the market was up. They voted out. They voted out the Democrats.
Question related to the regulatory or deregulatory agenda, which I think is part of what you're arguing on a long-term basis is going to help the economy. There's two things that I'm fascinated by. One is that it sounds like the FTC, at least, and the administration is thinking of trying to extend or at least be very similar. I mean, that's to what the Biden agenda was before. I don't know. And that was sort of some of the commentary about sort of what the next version of regulations look like, which surprised me. The second thing that I was surprised by was actually mergers and acquisitions activity in the month of January, which I would have thought would have been up, but actually was down 30%, as if January was back in 2015, and what that says about the confidence, to the extent that you believe that M&A activity is a barometer of confidence.
Well, Andrew, MAGA doesn't stand for
All right. So,
Wait, MAGA doesn't stand for what?
make M&A great again, but I think
it's a wonky junk. Don't worry about it. Let me just jump over here 1 second.
I was like, is this guy going to make a joke? He seems like such a stiff. He seems like a jolly stiff, but
that this economy that we inherited starting to roll a bit, sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
wow.
Detox period.
Wow.
Right?
This is coming
And then
from a government official.
From the Treasury Secretary.
I've been
All right,
waiting
and
to hear stuff like this for a long time.
That's right. Let me play this last part over here.
What degree they have put up barriers against us, and if they all will collect a lot of money, and we will make the system fairer.
couple of things. I think you've made the point that unlike the printing of too much fiat currency, which might be an underlying cause of inflation, the tariffs don't cause long-term inflation. They could cause some price increases, but not long-term. But then at the same time, you said that Americans don't necessarily just want everything to be really cheap. They want our workers to be employed here. And that the prosperity here doesn't mean being able to buy cheap goods. It means being able to live the American dream through having a job and having a future, et cetera. So we're going to have higher input costs forever.
So what, higher input costs forever? No, it's the tariffs are a one-time price adjustment, and everything else the administration's doing. We're not getting much credit. As of yesterday, energy prices were down 15%. Crude was down 15% since inauguration day. 10-year rates are down, mortgages are down. The spreads between the 10-year rate and mortgages have come in. So we saw we saw mortgage applications pop up last week. I think if we can keep on that trajectory, and Joe, the American dream is to be able to buy a house. We can't import houses.
But this could all be a reflection of the economy slowing down.
As an investor.
There we go. This all could be a reflection of the economy slowing down. All right. So everything he just described, the idea of labor supply, well, what he's talking about here is the slowdown of the economy in order to allow the worker to catch up. But the only way the worker catches up is if those who are ahead, the 1%, the 10%, get a pullback. So he's like, well, is the economy rolling over? Sure. And he's talking, this matters because of the wealth effect. The wealth effect of the higher stocks go, the more that the people who have stocks have money to spend. And so he's like, well, we got to rein that in. But in all this sort of like wonky talk of, look, the pain that's going to be suffered by people is by you guys. It's by the top, right? And that's what they're talking about. They're not talking about the Joe Blow at the gas station working. That's not what he's. His prices are going up. Look, his life is terrible. Monday to Sunday. I don't know what to tell you, but they're like, but the middle class and the wealthy, most of the middle class, we're going to feel the pain. And he's like, yeah, I mean, we can't import houses, so we got to bring down prices. We got to bring down yields, and the only way to do it is with an economic slowdown. So that's from Bessent's mouth, a nice case for it. And I just want to play one last.
Just before you play that, do you get the sense that those anchors talking to him, I get the sense that they're like, wait, we're getting honest, straightforward answers for the first time in a long time. Don't want to scare him, but want to get some more. Like, they look like honest students. Like, the teacher opened up the secret book and is telling us the truth about what's like. They have this energy about them that's like, wait,
that interview is one of the best. It's 40 minutes long, absolutely worth watching, and they go over all kinds of different subjects. I can't believe this guy, man, what he says about Ukraine. I mean, everything is just amazing. I can't believe he's talking about it, and they even extend the interview. Like, can you stay a little bit longer or whatever?
I can tell they look like
I was blown away.
They look like, oh my god, I can't believe we're getting this right now.
That's right.
Good sign.
All right, so let me switch. This is not too long. This is the National Economic Council Director Kevin Hassett, who's asked again. So he makes this point. Just listen to what he says about bringing down inflation.
The thing I could say, Joe, is that the president understands that if you want inflation to go down, which is one of his highest, if not his highest priority, you know, incomes the first couple of years under Biden dropped $2,000 per person after going up $6,000 per family under President Trump because of the inflation. So he wants inflation under control. To do that, you have to increase supply and reduce aggregate demand. So you got to cut spending and you got to increase supply. And the way you increase supply is you lower the marginal tax rate on labor and you lower the marginal tax rate on new investments. And so for labor, if you look at the people who aren't working who really want to be, it's people who have really ridiculously high Social Security tax rates. If we've got somebody who can work more overtime, that's increased labor supply. That helps them make a higher income and it helps reduce inflation because we have more supply. So President.
Okay, so that's all code for you, Peter. I'm sure it's all like
No, I
probably
understand. They
agreed.
want to reduce taxes in the right areas to incentivize growth in those areas. And I guess they're going to raise taxes or something in others.
Don't worry about the specific things they say they want to try to do in order to do it. The goal, what they want, is increased labor supply and reduced aggregate demand. Right? This is like when the Fed says, "Well, in order to bring inflation under control, we're going to have to have the unemployment rate tick up." Wait, so you want people to get fired? We're going to need some people to get fired in order to bring inflation down. That's what they mean. And so, in order to increase labor supply, that means more people have to come on the market for to work, and you need some people to lose their jobs. That's the only way you can increase labor supply, right? And so you get stuff like deportations. You get stuff like uh, a bunch of programs, a DEI or whatever. They cancel government firing thousands of people from the government so that the labor goes into the private sector, and now you have a bigger pool. And what happens there is that the labor, they have to bid, right? So they have to be able to accept lower wages in order to get the job because it's
You flooded the
you know
market.
all the guys want to get the girl at the party. So and then at the same time they want to reduce aggregate demand. Aggregate demand is the demand for to consume across the nation. That
Yeah,
means you
bring
want to
that down.
slow
Yeah,
people's consumption,
bring that
right?
down. What
Well,
does that increase savings? Is that the point of that?
no, what that does is that it reduces the pressure, the upward pressure on prices. So if 10 people want an iPhone or whatever it is, 10 people want an item, then the item will be a certain price. If only 3 people want that item, it goes down. If only one person wants it, they can have it at whatever price they want. And so the by reducing aggregate demand, you reduce the upward pressure on prices, and by increasing the labor pool, you decrease the pressure on labor. Uh, the price that labor gets paid, you reduce that. And there's also less spending, right? That has a double effect. And the more people who are unemployed, the less they're going to spend. Well, that's what a recession is. That's literally what a recession is. Increased labor pool and lower aggregate demand. That's what it is. And they tout the crude oil came down 15%, and it did over the last couple of since the beginning of the year, since Trump got elected. Oil is down 15%. Now, I'm not against recessions. That's not what I'm saying. I'm not against recessions. What I'm saying is that that's what they want. They do want a reduction in growth. They do want the economy to slow down until they can rejigger. They want to switch from the public sector to the private sector, and then we get a ramp up. Pretty interesting. Give me
And
one
a
second here
smart
while I
move,
just
right?
close this line. Give me a second while I close the line. Go ahead.
Well, I think it's a smart move. I mean, I'm not an expert in the economy or anything like that, but I do know that just juicing the economy and easy money, fast money, and all this stuff is probably not a good policy. That there has to be some type of responsibility coming back into play, at least temporarily. I really love the language of short term pain for long term gain, because when I look at any other field in society, that's what I see. I see short term pain, long term gain. And when you look for the easy route and the painless route throughout everything, chances are you're going to be ending up in a situation where you're making bad decisions and doubling down on those. So I'm all for it. It's kind of like the conversation with tariffs on Canada. One, I did not know we had such a high trade deficit with the United States. I know you have opinions about the trade deficits, but um, I would like it if Canadians supported more locally and there were changes done to the economy. If you could stand on your own 2 feet, I don't know if it's
You think so?
possible.
You
Was
think
that?
you'd like that? You think you'd like that?
Yeah, why not?
There's trade-offs.
Yeah, there are trade-offs, but I think a sovereign existence is better than subservience to.
Yeah, but you get less choices.
Yeah, you get less choices, but so
The
what?
mic you're using, you can only get the mic that's made in Canada.
Don't care.
And if it's not as good as the other one, well, that's just what it is.
Don't care. There'll be other options. Don't care. I've been trying to figure out what's going to happen with these tariffs, and oh, this is going to go up and that, and I won't get that. I don't care. we need to. I think countries need to rejigger themselves so that they're relying more on what they have, and people need to calibrate themselves that no, you shouldn't have every option and everything that you want all the time. There has to be
I
options. That's what produces creativity and innovation. Not we get everything for cheap from China. No, we need to be able to make things ourselves. We can't have the slaves and the serfs make.
right, but I come at this from a completely different angle. To me, it's like I don't care about what should or shouldn't be. For sure, this was always going to be the eventual outcome. Either a planned transition, understanding these forces that are arrayed against us, or the system collapses and you're trying to figure it out, pick up the pieces afterwards. And so to me, I'm just glad that, this Ron Paul flavor has showed up where they're like, okay, let's just take it on the chin. And there's a, even if they're just jawboning, they're saying, "Hey, let's get productivity back on the table. Let's clear out deficits. Let's rethink our economic alliances. Let's figure out what's going on because the status quo was a train headed right off a cliff. So that's all I really care about. Like, what's the trade here, right? And the trade is this inevitable thing is happening. And so to me, the best part of this is that Peter, you can make the most amount of money in a recession. Did you know that? It's a drop of things that you can make the most amount of money. But second to that is out of the recession, right? If you could have bought stock at the bottom of the dot-com bubble, at the bottom of the GFC, you'd be laughing right now, right? And so the idea here that this drop that we're expecting to see is planned. It's just like the crypto conversation we were having earlier, that you have an opportunity now in order to make quite a bit of money, right?
Is this why Warren Buffett went to cash?
That would be the argument. Buy lower. And so there's a bunch of people, and this is why I care so much about working with TradersPost and people in the markets. I just find it so important for people, if you're not exposed to the markets, you're not going anywhere. Okay? Unless you have some idea and you start a new business or whatever. If you're working at McDonald's and you don't have any exposure to the markets, either crypto or equities, what are you doing? To me, that's absolutely crazy. And then the knowledge necessary in order to understand what's a good move or not, understand how the dollar moves, understand how policy affects the growth of a nation, understanding inflation. If you understand these things, well, then you can make decisions that are far more intelligent. In the same way that you're not going to go to a 2-year technical school in order to learn how to program for the Atari. Like, you're going to make different decisions because you understand what the future might look like. And so I think it's super fascinating that the government right now seems to be telegraphing what they're going to be doing, and that means that after the recession, they're planning on new all-time highs. I mean, that's the plan. Whether that happens, whether we get stagflation, I don't know, but that's the plan. And when I see the liquidity indicator showing that liquidity is going to start coming in, start in April, and it's just rocketing upwards, that to me is that's Bitcoin at 250,000. That's buy your AI stocks now. That's buy things that are on sale. So I just wanted we're going over time. I have one last story that I wanted to touch on, but before we do that, I just wanted to end with just the final nail on the coffin here for what I think the pitch for they want a recession is. That you might say, hey Tom, all that is well and good that the Trump administration wants a recession, but what does the Fed think, right? So hear what they say about inflation.
Secondly, I think if you look, and I talked about this at Jackson Hole last year. If I look back and it looks to me like what you had was a global burst of inflation everywhere at the same time, and it largely, you got to look at global factors, and it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought. It really was. We had in mind, the recovery from the global financial crisis, and instead we got this really high-powered response, expansion, recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. And it was also all of the supply stuff that was happening. That took longer than we thought to unsnaggle. And we'd never seen it before. We knew in real time that it was going to be really hard to get that right. But so those two things created inflation globally. And
So that's just the opposite of what we're just talking about. He says what caused the inflation was tight supply, massive demand. And we just heard it from the NEC director. What they want is loose supply and lower demand. They want a recession. All right.
I did want to say one thing very quickly on that. I always thought for a president to do the right thing when it comes to the economy like this, like allow recessions, allow pain, you have to have a president who's willing to be unpopular and unliked, which I think that's what America might have right now.
That's why they're calling him the next Nixon. Let's see how that turns out. The automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to TradersPost.io and see how easy it is to streamline your trading. TradersPost, because your strategy deserves to run at full speed.